This is being recorded, so you should be able to pull it up. I'll send Travis the link so he can post it. And then I want this to be more of like a workshop. So if you all have questions while I'm talking, just let me know. You can either type it in the chat or just speak up, and we'll try to address your questions right away. Forex 101, understanding the foreign exchange market. My goal is to create something like a curriculum or, you know, a training platform for us to build a foundation and continue to grow until we are all comfortable making our own trades. And in order to start that, we have to start with the basics, and the basics are the trading plan and confirmation checklist. So those who don't know me, my name is Whitley. I've been trading since September. I learned the hard way that it's necessary to have a trading plan. It's necessary to have a confirmation checklist. I got too comfortable in the market, and it showed me who was boss, and it literally almost wiped my account out. So I'm trying to teach you all what not to do, or, you know, a better way to do things. One of the things that I was doing constantly when I first started learning was jumping from strategy to strategy, using all kinds of indicators, all kinds of tools. And it gave me a false sense of hope, because I would win a trade, make profit, and then the next time I would try to recreate what I did, and I had no record of it. Or vice versa, I would lose and just not know how to not do that again. So jumping from strategy to strategy, it's counterproductive, because you need to know what you're doing in order to improve it. And the difference between trading and gambling is having a plan. If you ever go to the casino, if you gamble, I don't know if people do this on the side, but if you gamble on the side, you know, you go in with the hopes of winning without any actual plan how to do it. You're kind of just leaving it up to the universe. Whereas if you have a trading plan and a confirmation checklist, you're helping yourself be more profitable with with better trades, potential trades. So the first thing we're going to start with is, hi, my name is, for me, it's Whitley, and I am a Forex trader. You need to understand first and foremost why you are trading. Your why is going to get you through either wiping out your account, almost wiping out your account, having 10 consecutive losing trades. It's going to get you past all the tough times, because you're going to focus on that end goal of, well, I want $10,000, or I want to buy a house, I want to pay for my kids' school. Whatever your reason for trading is, you have to keep that in mind at all times. Also, you need to discover, and many of us, we've been trading, whether it's live or demo, but you need to discover what type of trader you are. With that, if you're a scalper is typically a trader who goes for small, short-term profits during a trading session. If you're a day trader, you're typically someone who buys and sells on the basis of small, short-term price movement. If you're a swing trader, that's a trader who's willing to hold a trade for several days at a time. And I need you all to focus on that part, because one of the tools that we use on a regular basis is, you know, swing trade. We have the app, we get the alerts, and we get in it, and then we jump out because we're losing money, or we think they did bad, or we didn't get the notification, things like that. But it's important to keep in mind that if they provided you some type of alert, they had reasons for it. And for swing traders, they're typically focused on a longer term. So, you know, it could last for days. So I just wanted to add that there. Or if you're a position trader is a long-term trader who holds positions for months to years. So you really have to understand what type of trader you are so that you can build a plan based off of that. Also, you need to understand what type of analysis you prefer. Are we still good? Everybody still on the same page?
Yeah, we're good.
All right, perfect. Thank you.
Yes.
Okay. So there's three types of analysis. We have the technical, the fundamental, the sentimental. The technical uses the study of price movements. This is when we're focused on the charts and indicators and price patterns. Fundamental traders, They're observing the political and social and economical news. So this is trading the news. If you have a pen and paper, or even if you can screenshot this, it's very important. Bloomberg TV, Bloomberg.com, ForexFactory.com, and those provide really good economic calendars. So if you're a fundamental trader or you would like to become one, make note of those tools. The third is a sentimental analysis, and traders who do this are trying to get the overall feel of the market. They're trying to better understand whether it's a buy or a sell, and they're basing their trades off of that psychology. Now, for the analysis part, I want to make a note that it's important that you try to incorporate all three analysis. So, for example, let me go back just to show you and give the example. For me, I like to start off as a sentimental analysis where I'm looking at a pair and I'm like, okay, this is a buy trend. That way I have it in the back of my mind that no matter what trade I put in, the overall trend is going up. So if I'm putting in a sell for this pair, it's going to last but so long because the ultimate trend is an uptrend. So I start with sentimental to understand what's going on overall. Then I go into a technical analysis where I'm trying to see what the charts have done in the past. I don't know if you all have heard this, but you look left to get right. So you're looking back at past events to see what possibly could happen again. And then I like to take that analysis and go into my fundamental and see if there's any news alerts coming out that may affect my trade. So it's really good to incorporate all three analysis to be a well-rounded trader. The next thing you need to know is what sessions you prefer to trade in. There's 4 major Forex sessions. We have the Sydney, the Tokyo, the London, the New York. The most money moves during the London and New York transition. Also, typically for the London market, the web analyzer starts to go off if you're using that tool. That's when you're getting the most alerts all the way into the New York market, and it tends to slow down after 4 p.m. during the day. So you want to always understand what type of trader you are, and depending on what type of trader you are, what the best session to trade. Okay. So here's the news releases part. So below is just approximate times of when alerts are given for the different countries, and this is good to incorporate into your fundamental analysis. So this is helping you to create the full picture for your daily trades. And again, we can go back to it, but the tools for looking at the economic calendars, those are really helpful in planning for the day because that could be a 30 to 60 pip jump within 1 minute. Okay, so components of a complete system. You'll first need a trading plan. The trading plan encompasses which markets you'll trade. So pretty much, are you going to do USD and JPY? How much capital you're willing to trade with. So today, I'm only allowing $20 out of my account. That's the kind of mindset you want. What chart setups you're going to devote your time to. So in that sense, when you're looking at the different charts, are they consolidating? Are they trending? What are the charts telling you about the day or that particular pair? How you'll manage your risk, you need to understand that because it's recommended that you do 3% of your account or less. And then also any upcoming news alerts and things like that should be included in your trading plan. Pre-market routine, I'll show you an example of that, but with the pre-market routine, you want to understand what's going on for the day, in addition to get your mind situated, relax yourself, light candles, listen to music, get focused for what you're about to do. A confirmation checklist. This is a list of questions that you go through, yes or no. It's very quick, and this should give you the go-ahead to get into a trade. Or if you're saying more no's than yes, then that's a trade for you to miss. There's so much money in the foreign exchange market that you do not have to trade, every alert. And your confirmation checklist will help you decipher which one's best for you. Your trading journal, a trading journal can be a notebook or a spreadsheet. With this, you're just tracking your trades. You're saying that at this time on this day, I got in for this buy for this pair. And you want to also document your emotions and, did you follow your trading plan? Did you follow your confirmation checklist? Things like that. So that's the components of the complete system that I recommend everybody does so you don't wipe out your account like me. So now we're going to go into details of each, but does anyone have any questions so far? Okay, perfect. So pre-market routine. Again, this is your trading routine, and it helps you relax, refocus, and plan for the trading day. It gives you the opportunity to review any open positions that you may have. So if you got a swipe trade at 11 o'clock at night and you wake up, you want to check its status, things like that. You want to review what you did yesterday, what the market was doing yesterday, and what it most likely could do today. You want to get yourself up to speed on the market with the news alerts and things like that, and be ready to trade. So it's recommended, for example, if you wake up at 6 a.m., you want to have your routine completed prior to the start of New York session so that you're ready and prepared to go in at that time. Now for your trading plan, this defines what is supposed to be done, why, when, and how. Okay, this will help you limit trading mistakes and minimize your losses. I have, it may be difficult on the screen, but I have limit and minimize bolded because you have to understand that you will lose. It's inevitable, it's going to happen. Your goal is to minimize those losses. You're supposed to focus on your risk management so that whenever you take a losing trade, your winning trades will always overpower them. So that's the focus on the 3% in managing your risk. A trading plan requires discipline. You have to be willing to go through it. You'll go through losing trades. You'll go through family situations, work situations, things like that. But you have to have the discipline to fight through it and follow your trading plan. It helps you to measure your performance so that while you're going through your trading plan, if you understand that your work schedule switches or someone's, a holiday's coming up, things like that, it gives you the framework to measure your performance in addition to see what you need to tweak to improve your trading. Now with the trading plan, and this bullet, it reminded me in the group chat when Ariana asked for the web analyzer. I wanted you all to understand the difference between a trading plan and a trading system or strategy. Your trading plan is literally what you expect to happen, when, why, and how. Your trading system or strategy, it consists of what tools you're using, how you're going to use them, how long, exit, and all that other stuff. That's what happens with your strategy in the system. So they're two different things. Now your confirmation checklist, it's just a checklist of questions you run through. Here are some examples that I use. I actually got this off of the internet and it's been working perfectly for me. So we'll pause here and give people the opportunity to either write it down or take a screenshot. Does anyone have any questions so far? Okay, so with the confirmation checklist, this is going to help you avoid those last minute, oh, I got an alert, it hasn't hit take profit one, I can still jump in, that oh, I think I'm about to miss something. This should ground you and let you reflect back on your trading plan originally and your trading rules to make sure that you're following all of them prior to jumping into a trade. So for those who play sports, my sport was basketball. It's kind of the same concept in the sense of going to the free throw line. When I used to go to the free throw, and I haven't played ball in so long, so forgive me if I misspeak. But when I used to go to the line, I used to do the same routine each and every time. Prior to the ref passing me the ball, I would wipe my shoes to make sure I had some grip on my shoes. I'd wait for the ball to be passed to me. I'd spin it once, dribble twice, and then shoot my free throw. Each free throw, I did the exact same thing. That's kind of how you need to think of your confirmation checklist. These things have to happen prior to me taking this shot. Okay? I'm sorry, what did you say?
I said, yeah, that makes sense.
And then so with your trading journal, you should treat this like, for those who work out, it's kind of the same as your workout journal, where you're tracking your performance, you're tracking your each entry, exit, the times you did it, how you were feeling when it happened, and this will help you keep track of your performance, and it helps you reach your goals. Because if you don't know what to tweak or what you were doing at this certain time, you really don't have any reference point. So when somebody asks you, well, how'd you make $100? I don't know. Or how'd you lose it? I have no idea. Well, why'd you jump to using the MACD rather than using the RSI? Well, I have no idea. A trading journal will help you ground yourself and understand why you're making any changes to your routine, or why you need to make changes to your routine. It will also make sure you're on track to catching the amount of pips that you want daily or weekly or monthly. It's the only way to make sure that you're improving gradually. Because if you're like me, you're just excited by the opportunity and you're like, oh my gosh, I'm about to get rich quick, things are sweet, and then you get knocked on your butt and you really don't know which way is up. Once I started keeping a trading journal, I was able to refer to that whenever I made a mistake to understand what I did wrong and when. So for example, if I had a losing trade last week, I could look at my trading journal, find the entry for that day, for that time, for that pair, go back to my chart, and then backtrack, completely see what I missed. You know, did everything follow my rules? Did I follow my rules? Did the market just do what it usually, what it tends to do, which is, move in the opposite direction? It helps you just keep track of things. So a trading journal is very important, or else you'll never know where to improve. Now, I want to say from here, I'm going to give you all examples, and I can actually, it may be better if I send it in the group somehow for you to have, and maybe you can build your own trading plan off of this. But this is a complete trading plan strategy. Everything's included, okay? So we first have the pre-market routine, where you're getting your mind situated, you're doing your affirmations, your mantras, you're looking at your trading plan to understand what rules you need to follow. Excuse me. And then once you set that up, and you want to do it at the same time every day to really build the routine. But once you get through your pre-market routine, then you follow your trading rules. You go through all of your trading rules to make sure when you jump into the market that you're not jumping in blindly. I'm sorry. So for example, here at number 2, it has look at the 4-hour chart, see where the trend is going. For the hour chart, do 2 trend lines. Understand, is it still following the same main trend, or has it switched? See if it's consolidating, see if there's any reversal signals, see if there's any support and resistance lines close nearby. Another thing I really liked about this plan is it also gives you the idea to check the harmonic scanner to validate and to, find confluence. Because one of the things I think we all should be working for or working towards is to step away from the tools that IML provides and be able to stand alone as an actual trader. So when we have trade houses or, when we go to Vegas in March and somebody asks us to look at something or they ask us for our opinion, we can speak for ourselves rather than say, hold on, let me look at my phone. Swipe Trades just gave us an alert. This is what we're doing. So with a trading plan and your own personal rules built to your life, you'll be able to reach that point of standing on your own and understanding the market. So the next part of this particular plan is where I was telling you the trading strategies. You see how it includes the harmonics, it includes swipe trades and what they're going to do for each of those and their strategy for handling whenever they get a signal. Very helpful, and it'll help minimize those swipe trades that we accept that we think, I don't know what they were looking at, but we're losing money. It'll help you pick a little bit better. Your trading plan also needs to address your risk. So if you're trading with a 0.02 lot or twin trading, you should know how much risk for each trade you're going to go through. You want to stay within 3%, but you have to know your own account and you have to choose your risk management based off of your personal experience. Someone who has an account of $50 shouldn't and wouldn't have the same risk management as somebody who has an account with $10,000. So it's good to get advice, but it's best to do what's good for yourself. This plan also has a post-market routine, which is really good because everybody needs that break. You need, when you're leaving your job, some people are like, oh, I'm going to happy hour. I need to change my mindset. I need to do something different. So it helps you break up your day. The next page is going to be the checklist that I was telling you about, where you should be able to go through each of these and say yes, no, yes, no, yes, no. Okay? And then you should also have a plan for your exit. So if it reaches this point, or if I reach my daily pip goal, then I'm getting out. Don't be greedy, because if you're greedy, you're going to lose. And it also talks about, well, if this trade is going well, how will I add to my position? You shouldn't just jump in arbitrarily because, oh, I'm in profit. Because as soon as you do that, I guarantee you the market's going to turn on you, do a reversal, and you have one trade that's in profit and one trade that's negative, and then you end up canceling each of them out. You always want to have a plan for why you're entering the market and how you're going to do it. And you always want to have a plan to how you're going to exit the market. Is everybody on the same page with this?
Yes.
Yes, ma'am.
All right, perfect. So this is just an example of the plan. So focused on the amount of the account, how much they plan on making compound-wise, the pips that you'll need to do that, the months it'll take to reach your goal, and then also tracking what you did past years, things like that. So I will add this to our group, but I also want to show you another example of a trading chart. So if you can recreate this in a notebook or an Excel or anything like that, it'll be perfect for you. So you'll need the pairs, you'll need to know notes. For notes, you'll want to know emotional state, what was going on at the time, things like that. Time calls, so if you're doing swipe trades and they called it at 8 p.m. on the 10th, you'll write that there, whether you're in a buy or a sell, the indicators, whether you jumped in because RSI, said it was overbought or oversold. What are your candles looking at? What lot size did you choose? The take profit, stop loss, and then you always want to finish with whether or not you were in profit or if you lost. But this will help you go back to your trades and understand them better. Okay. So I've done a webinar like this before, and I offered the team the opportunity to share their trading plans with me, and I do a little critique to make sure that your confirmation list and your trading plan aligns with each other. So I will offer that again. So I will put my email in the chat. So guys, if you all want to send me your copy of a trading plan, see how it works out, I'll do that. Again, you'll have these templates provided as well. That's really all I wanted to share with you all, how important a trading plan is, how important confirmation checklists are, and give you examples of what they look like. So does anybody have any questions or any lessons learned from when they jumped into a trade, got burned, or, you know, life before a trading plan, life after?
Hi, this is Lynette. You're going to share the spreadsheet that you had, right? Can you share that with us where we can
Yes.
get a link to it?
I'll share both of them.
Okay, thank you.
So this is Aaron. So how often do you have these webinars?
So I have it on the schedule for every Wednesday.
Okay.
But so for example, we're focusing on the trading plan today. Next week, this is my goal, but if you all have suggestions, then I'm open to it. But next week, I want to focus on entering a trade. So starting with looking at your MetaTrader 4, understanding a buy, a sell, a buy limit, stop, buy stop, things like that. So that's my goal for next Wednesday. And I want to just keep growing until everybody has that foundation to go on their own.
Okay, good. Okay.
And then this recording will also be available too. All right. So we are finished. It's 8:03, and you should actually have enough time to jump on Travis's prospect webinar if you want to invite anybody or if you just want to learn a little bit more.
Okay. Well, thank you. Thanks a lot.
No problem. Thank you all for calling in. And again, if you have any questions, just let me know. I'll post the documents in the group chat, and we'll continue to learn and grow from there, okay?
Thank you, Whitley. Thank you, Whitley.
Thank you, guys. Have a good one.
Yeah.